this. Make this a little bit larger. Okay. Hey, good afternoon, guys. Good afternoon, Blaze. Let's see how many people are going to join. We'll mainly be mapping out biases in the stream here and what I'm interested in to see overall. If you guys enjoy these live streams, make sure to subscribe on the channel and also to like the streams. This way we can of course grow as a CFT community, which is good in general. Also, I hope that you guys saw that the new update went live and that CFT is now working with Bybit, which is a huge upgrade to the space. Evox Trade, hi bro. Hope that you're doing okay. It looks like yesterday I shared with the private community that I have that I wanted to look for shorts on indices, but it looks like that the move is going to happen pre-market, which is a little bit sad. I mean, the move was clear. This is an easy draw on liquidity, of course, for the indices, where we can see that at the Monday lows is that we have a perfect set of relative equal lows right over here, which should be an easy draw on liquidity. If you guys have any questions or maybe some specific chart analysis that you would like to see from my end, make sure to use the chat. You can always reach out to in the chat so that we can have a little discussion about whatever you want. Okay, some viewers hopping in. Hello everyone. Okay, first of all, I would like to explain to you guys why I stated yesterday why I would like to short on indices in general, and that is it could easily be framed on the daily time frame. Look, the market is crazy volatile. It's the economy is going to shit. Donald Trump is making specific decisions in his policy, and in regards to his policy, yeah, he is making it a trade war in general between multiple countries, of course, with the tariffs that he has been implementing in his entire strategy in general, which causes to be creating a lot of pressure on the entire economy and a lot of situations where we have uncertainty and that we do not really know what is going to happen next. Markets suffer from that in general. And when we take a look at the chart, it is of course easily reflected in the value of the multiple indices that are traded in the US. You can see that we are having a very large downtrend already for a small period of time, and at the beginning of the month is where the tariff play came into life. Saw a heavy rejection to the downside on indices overall. But why is it wise to be looking for shorts today on indices in general? Well, that could easily be framed on the daily time frame. Look, we have of course certain market cycles that we are could be trading in. We could be in an expansion phase, we could be in a consolidation, we could see a reversal, or we could see a retracement. I think that I did not say that one already. But those four market cycles are the ones that you should be focusing on. And only certain things like market cycle wise are going to happen after one or the other. So when we take a look at this chart, this is Monday's candle. This was yesterday, so this is Tuesday's candle, and this is the candle from today. When we take a look at how price has developed so far during the week, we can see that on Monday we had some relief to the upside with a green closure of a candle, but the wicks are relatively the wicks are relatively high on both sides, so it is a little bit more indecisive. However, the clarity comes into play when we are taking a look at this daily candle, which is looking quite the same on the other indices as well. I'm just picking ES right over here as a standard like thing to have it in the same comparison towards the others. So looking at the daily candle yesterday on ES, we can see that we are closing bearish and that we have a large top wick going into the internal range liquidity pool right over here in the form of the daily gap. Also, something that is noticeable is that NQ fails to take out Monday's high, whilst the other indices are taking out Monday's high, creating a cracking correlation between the assets, and thus we have SMT divergence at daily highs. After the SMT divergence has been created, we can see that we are seeing a strong reversal happening in the daily candle in general, which is identified with a relatively smaller body. The closure wick at the low is relatively close to the closing price of the body, and we have a large top wick which goes into a high time frame key level. So with this being a move higher on Monday, Tuesday being the reversal, it is very much likely that we are going to see an expansion continuation of Tuesday's move. So when we are seeing the reversal on Tuesday, we anticipate Wednesday to be the continuation of Tuesday's move. And that is where you want to be targeting that Monday low right over here, which is a beautiful set of equal lows, which should be used as our draw on liquidity. And that is how I framed the bias going into the session today. So this is the draw on liquidity where you should be anticipating price to go towards for the indices in general. For further, I am very much interested in longing Euro USD towards the buy side liquidity pool above us. I stated to the private community that I wanted to see a retracement during London. Why did I wanted to see a retracement during London? Well, you can clearly see that we had an expansion phase during Asia, and it is very much likely that we are not going to see an expansion followed up by an expansion. So we can anticipate London to be a consolidation or a retracement period. We got the retracement period, which is desired by taking out this short-term low into the hourly fair value gap. We are now displacing away from it with this candle right over here. So what do you want to do? In half an hour or so, we have the new 4-hour candle forming. And we can anticipate that candle to be an open, low, high, and close. So with the next 4-hour candle open, you want to try and position yourself in the hourly wick of that 9 a.m. candle so that you can trade it towards the buy side liquidity pool right over here. So those are the main things that I am interested in right now. It could be the case that we are absolutely going to smash through levels already pre-market. Then it is just a case of, yeah, we are missing the trade, which is also, of course, completely fine. You need to get comfortable missing trades in general. I said it multiple times already on these kinds of live streams, but it is very important that you get comfortable going into a session that you are not going to take a trade or something else, because you need to stick to your plan, and that is very important to do, because that is also something that you could refine over time and that will get you further in the long run. Just taking random trades will not get you there in the long run at the end. Yeah, a short view on the market on my end. I hope that everything is clear. Do you guys agree with me? Do you guys not agree with me? It's everything is okay, of course. And if you have any questions, feel free to leave them in the chat down below, so that we can cover them. And or maybe you have a specific chart that you would like to see me analyze, so that that's also okay, of course. But these are the main assets that I will be looking at in the upcoming New York session. And Euro potentially in London close, but we have to see how far price has reached already. What would be very curious to see how we are going to trade at these levels. Are we going to see a rejection? Are we going to displace through it? Stop loss placement is maybe going to be, why is your USD breaking out? Is it because of the liquidity sweep in the 1 hour tapping the FEG? Look, the trend is clearly bullish. That is something that is probably could easily be seen. During London, we saw a retracement, taking out a short-term low. This is where order pairing takes place. So we are taking out sell side, and with this order pairing, we need to pair those orders with the other side of the market, which we could be finding over here at this buy side level, or potentially even higher. So yeah, for me, this is the reason we are in a clear uptrend, taking out short-term low into an hourly key level, and that is the reason for the displacement. But of course, you have to keep in mind that price does not really move only solely based on technicals. There's a strong fundamental case right now that why Euro USD is a lot stronger compared to a longer period ago, because due to the economic situation in America, that is the reason why the euro is gaining a lot of strength, and that is also something that could easily be seen in also the reflection of a GBP USD, because the dollar has a major impact on the entire world. Many people would like to say that it is not, but the US is really tied into the economy in general, so everything that the US is doing will have his impact on the market overall. But if you look at the DXY basket, you can see that the euro has a very large impact on the DXY basket. It is the largest sum of like different assets that are inside of that basket. So when DXY is going to have severe weakness in the market, that will have a greater reflection in strength determination on Euro USD compared to GBP USD, because Euro USD simply has the bigger factor in general. Because you can clearly see it as well. Euro is already trading at the high, whilst GBP USD has a lot of room to go still. So if you are wanting to long an asset that is surrounding the dollar, I would definitely suggest you to look at euro pair longs compared to GBP USD related longs. So yeah, from a technical part, I would definitely say that the sweep of the low into the key level is the reason for the move higher. And we of course have a lot of fundamental reasons to see more upside on euro dollar and more downside on DXY. I hope that that was a little bit clear for you, Mukesh. Da, 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 da. And with the expansion over here, you want to see a dip with the next hourly candle, and then the move higher. On the 1T, 1T is it then 15-minute, I think, Franklin. Let me take a look at silver 15. The thing is with silver, I do not have like a lot of data on that asset. So, which makes it a little bit more tricky. Daily wise, huge consolidation, taking out sell side of the range at the extreme, which is good. Now I want to see displacement away from it. External range, this should be the target, and potentially of course even higher. Yeah, let's say midpoint of the FEG should be a doable target. How did the daily candle form? We have open, low, this low taken out. No, I would not. I wouldn't. No, I would not enter, because for me, if it was bullish, you would have probably already entered with the run on the short-term low right over here. It exactly taps discount, but now we are taking out some buy side levels and we're rejecting it. So no, I would not indicate this as a valid long, because we are dipping into the FEG. after taking out the short-term low, and we tap discount exactly. So we got that displacement already. So to go into it right now, then no, I would not see that as your best bet. You because you got that move already, but you probably get that. You got the dip. We have consolidation here, premium discount, exactly tapped it, short-term low taking out, and we got that displacement. So we have already that buy side levels taken out, and now we are just rejecting that. So no, it's not a valid long in my eyes. Yeah, TradingView sometimes struggles with going over the alerts correctly, which is freaking annoying. Even on, I don't know which day it was. I think Tuesday. Yeah, I think it was yesterday that or Monday that alerts did not work at all. And that is simply very, very annoying. Let's go back to the Euro chart. Yeah, bonds are extremely bearish at the moment. And this is all the effect of Trump's policy. Look, and that is the exact same with indices. It is so heavily news orientated. Creating a real opinion about it from a technical basis is hard because levels are just not going is not like being respected. Everything smashes right through it. Um, so it is a little bit hard for me to give like a clear view on bonds, but we are bearish at the moment. But in that case, we are also very much bearish on dollar. Look, we are only every day that we are in this like uncertainty, we are getting one step closer to a scenario that our friend Donald Trump is going to talk the market around. So, and that could be through multiple ways, of course. Think about negotiations between the countries about the tariffs, or maybe through something else. He is going to talk the dollar up and the indices back up again. But when that is going to happen, we of course do not know that. But eventually, we will see that happening. but it's quite conflicted then, right? Yeah. You probably mean like the correlation between dollar and bonds right now? Mm, well, the volatility is crazy. Uh, it depends. I mean, these are also kinds of times because we are seeing a lot of movement. Like, you need to, yeah, you need to take something from the market in that case. I would say, as Tom Dante said in the past week, if you're completely skipping out of the market, yeah, if you're not feeling comfortable, absolutely do it. But it's also in the case like grow some balls. Uh, look, risk is elevated. That's just true. So yeah, in that case you can see it as a lower probability environment, yes, but in that case you can also always find a reason to not take a trade. Is it a lower probability? Yeah, maybe, but we are also seeing a lot of movement, which is also good. It's a little bit in between, I think. But that we are seeing cracking correlations between assets, that's just a fact. That's true. Look, you in the end, and you see a lot of like those ICT traders, and not to be a basher or anything, but you see a lot of ICT traders like, okay, I'm not going to trade this day, this day, this day, this day, this day, and then it is already weekend, and then it is already next week. Whilst their model and everything shows up. I don't know. I find it a little bit in between. But I do think that you get what I mean. Euro. How's the ADR looking? We are at 60%, so the daily range should not be entirely exhausted. Do you have a plan for indices today? I think that I'm going to wait for the open. Well, I do not think that. I know that I'm going to do that. Because I can see it go multiple ways, or we're just going to see a flush, or we are going to take out the highs, create SMT at those highs, and then we are going to see the reversal. But I have no clear clue of what to anticipate. As in, like, this 4 hour candle's high? No, I tend to more to wait for like the continuation to happen, so like a confirmed reversal. So I wait for the CSD. You could do it, but with your stop above the dealing range high. But as I said, risk is elevated, so I tend to wait for the CSD now at this moment in time. Yeah, in this case, on the yeah, because normally I tend to trade the turtle soup with highs and lows and discount or premium, but since we could easily just blast through it, then yeah, I would wait for the CSD. CSD also the 10 a.m. candle, so the next 4 hour candle. So you're going to see what 9:30 does. Let that play out, and play the continuation at the 10 a.m. Or maybe 10 a.m. is going to be the reversal. We have to see. Because for now it looks very much likely that we are going to see a run on the high, and then we are going to start seeing a reversal. Okay, guys, but I've mapped out everything, and that is also where I'm going to close off the stream. I would like to wish you guys a very nice rest of your day. If you want to speak to me, you can always join the free community to ask me some questions. And otherwise, I would hope to see you guys next week again. For now, I would like to say a very nice rest of your day, guys. Bye bye.